Most early stage investors are men. They live in the southeast of England. Their name's Steve, and they invest with their mates named Steve and entrepreneurs named Steve. If you want to see more robust, interesting, dynamic, different businesses, you need to have different people sitting at the table and writing checks. Start. Just start. You have to literally put your hat in the ring and write a few checks. Half the people who joined HERmesa had never written a check before they came into our community. Women are over-mentored and underfunded, and that is not okay. We absolutely invest for profit. It's about creating generational wealth. If we don't create that wealth, we can't drive systemic change. The only way that happens, in my mind, is with capital. Capital in and capital out to be recycled. I moved to work on Wall Street at 21. I had to wear a skirt and heels. I couldn't wear trousers. It was, quite frankly, for me, a very toxic culture. All jobs have shit. It's just what shit you can handle. The biggest risk was setting up HERmesa. You can try and fail, or you can be afraid to try. We want to be behind successful female exits in the next 5 to 10 years. We want to change the narrative, and the only way that narrative gets changed is by actually showing success.
Welcome back to Catch the Upswing. I'm really excited to be joined today by a remarkable woman, Marla Shapiro, who's the managing partner at HERmesa. And she is really revolutionizing the way we think about finance and funding for women entrepreneurs. So I'm very, very thrilled to welcome you, Marla.
Thank you. Happy to be here.
Thank you so much. Marla, I would love to hear how you began HERmesa. What is it that you do? And if you could talk a bit about the origin story of it all.
Yeah, absolutely. HERmesa is a women-led angel syndicate. We're based in the UK. We invest in early stage women co-founded ventures. So that means women have about 30%, a minimum of 30% of the founder equity. We invest in tech and deep IP, and we started in 2020. We started with myself and another 4 women literally sitting around a table, mesa, obviously in Spanish, sitting around a table. And, it was laughably small, but we had a really big vision. And the vision was to change the gender balance in early stage investing. As you, and I'm sure your listeners are aware, most early stage investors are men, or as I like to joke, they're men. They live in the southeast of England. Their name's Steve, and they invest with their mates named Steve and entrepreneurs named Steve. And I just think it's, there's a lot of backlash against diversity, right, as a tick box. But I think diversity is a real power. And I think that if you want to see more robust, interesting, dynamic, different businesses, you need to have different people sitting at the table and writing checks. And that was this sort of burning passion that started when I first started to angel invest, which I loved after a career as an entrepreneur and an operator. But there were hardly any women. Really, there were hardly any women. And then I did a huge amount of research. In the UK, also Europe, women are about 14% of all angel investors. In the US, it's 37%. So obviously, with my American accent, I'm bi-national, bicultural. I started to really think about how was it that the US was so far ahead? Was there a gap that we could fill in the UK? And so I started really small, literally with a lot of research, 5 of us sitting around a table. I was like, let's do something. Let's pool our money and write some checks. And fast forward 5 years, we're a community of over 300, 90% women from 63 countries, and we've done 46 rounds of financing into 35 women-led ventures.
That's incredible. Wow. And it's incredible if you look at the industry and then the change you were able to achieve in such a short period of time.
Oh, it doesn't feel short, but thank you.
Unbelievable.
Thank you. And I think another thing that I should mention is half the people who joined HERmesa had never written a check before they came into our community. So we're really doing what we set out to do, which is to bring more women into the table to add their expertise alongside their capital and to fund the vision of the future that they want to see.
Wow. And if there are women listening to this podcast who are interested and who have perhaps always dreamed about being an angel investor, but haven't really, dared to take the leap or don't know how to get started, how do you go about it?
Well, obviously you should join HERmesa, but we did an event with one of our members, and we asked actually her advice. She's a South African woman living in the UK, started angel investing in South Africa and now here in Europe. And Marcella has a great line, which is start. Just start. Start small. Join a community where you can learn from others. You can get vetted quality deal flow. There'll ideally be a structure. We run a highly structured process, but start. Sitting on the sidelines, waiting to be perfect, needing to qualify as an angel investor. There is no such thing as a qualification. You have to literally put your hat in the ring and write a few checks. We were amongst the first in the UK to start with a sort of very low minimum check size. So you can start small. So you can learn on £2,000 minimum tickets, or you can learn on crowdfunding. But the most important thing is to start. There is no, you can read all about how to play the piano, but if you don't actually play the piano, you'll never really learn.
And I love the model because I think often we believe that to be an investor, you have to have a lot of money. And if you're able to start with a small ticket, as you say, of just 2,000 or a bit more, that's an incredible opportunity to gain experience.
Absolutely. You don't know what you don't know. And you know, a big part of early stage investing is pattern matching, which is also the death of diversity and innovation. You know, but you have to sort of know what to look out for. And the only way you get that experience is by being in the trenches. And so I was just on a call with one of my partners about a deal, and I said, oh, we've seen this over and over. You know, this is what we want to look out for. And that's important. That's an important muscle to develop as an investor.
Yeah. That's great. And I love the community because I think there's also real value in co-investing alongside other women
100%.
and learning from them. So you can kind of start as a follower and then...
So we have a quite unique, what we believe, unique positioning here in Europe. So we are operators turned angels. We use our community of, as I said, 300 investors to be our experts. So because we're gender lens investors and we invest in any women co-founded tech or deep IP business, that means one day I could look at law tech, fintech, biotech. You know, I don't know a lot about any of this, but I know people who do. So our network is incredibly broad and incredibly deep, and we will only take a deal forward if we have the exact right person. So we looked, for example, at software for the police, and we have somebody who's an ex-detective from the London Met.
Wow.
And she was the expert. And we recently looked, we did maybe 50 screenings last quarter, and we had 42 unique experts. So our model is very much all about deep sector expertise to verify the problem, the solution, and the go-to-market. HERmesa is myself and my two partners, Vibka and Emma, and we're the very experienced angels. We've done over 100 deals, written 100 checks ourselves. And so that kind of combination of we've seen it before, we know these are the general angel risks, with the bottom up, this is a real problem, or there's 16 people already doing it in the market, or whatever it is. That's how we approach it. So we really use that expertise to add value to our investment decision, but also to the founder before we even invest, before we even write a check. And our motto is to lead with capital, follow with advice, because women are over-mentored and underfunded, and that is not okay. So we lead with capital and follow with very sharp, high-value, low-time commitment advice and expertise from that deep network.
It's such a unique model, and I love how you have really thought about the solution because it addresses so many of the persistent challenges that we have seen, as you say, that women are over-mentored and underfunded. So I love that you are leading with the investment because that really speaks to your trust and faith in the strength of those businesses.
We invest for profit. We won't invest in you because you're a woman. We'll invest in you because you, as part, being a woman, whatever is part of your lived experience, but what you really have is an absolutely unique take on robotics or a unique take on, the AI agents in consumer law or whatever, right? So yeah, we absolutely invest for profit. And that's our model. I think what sometimes gets lost when we talk about gender lens investing is what it really means. And for me and my community, it means two things. One, it absolutely means putting our money and our passion and our time behind what we want the future to look like, who is building and what they are building. But equally, it's about creating generational wealth. It's creating long-term value from this very long-term asset class for ourselves and for our founders that we can then reinvest in the ecosystem and also general wealth, right, to live on. And, well, again, long-term at the end of your sort of asset allocation. But if we don't create that wealth, we can't drive systemic change. And that's what we're really about. We want to change the equation. We want more women at the table as founders and funders. We want to change the narrative, but the only way that happens, in my mind, is with capital. Capital in and capital out to be recycled.
Yeah, I love the holistic thinking and also the impact at multiple level, at the creating wealth at the founders level and funding businesses that have been so chronically underfunded or unfunded. And then also thinking about wealth creation for women as investors and bringing them in. It's very powerful.
I probably at this point need to do the disclaimer. This is a high risk asset class. It's only for qualified investors. But the fact of the matter is, with a a fully diversified portfolio over time, you should expect to earn 300% back on your money across the portfolio. And that is an attractive investment for people who can afford to take the risk at that point in their investment life cycle.
And I should probably...
Not allowed to give financial advice. Probably should say that too.
I also have to add a disclaimer that this podcast is not about financial advice.
Correct.
But what we do want to do is just elevate the stories and highlight the opportunities. And then people can get their formal financial advice and see what is right for them.
So one thing that I'd like to actually pick up on is you talked about sort of that we're a women-led group and about women changing the narrative. Recently, and I will make sure that I send this to you so it can go in the notes, a study came out looking at how women angel groups, women in predominantly women groups behave versus women in predominantly male groups. And this study, it's a small sample set, but nonetheless, the study shows that when women are in predominantly male groups, they ask less questions, they invest less frequently, and when they invest, they write smaller checks. And when women are in an all-women group, they invest just like men.
Wow.
And so I think that there's another part of HERmesa is very much what I call culture, but I think is really organizational design. How do you create an environment where women who are very talented and highly skilled and do come from a male-dominated industries, most of us do, but that you feel comfortable to do something new. And that's, I think, a sort of feels a bit squishy, but that's kind of the magic of what HERmesa does, is it creates that environment that allows us to invest just like men.
I love the cultural aspect because I think that often gets overlooked, and that's a really interesting research insight. Yeah, we'll make sure to link that study in the description.
Absolutely. I love it. Obviously, because it kind of proves my model, but I think it says a lot about gender norms and things, like that.
Marla, when was it for you that you first noticed that finance wasn't serving women the way it served men?
Well, in two ways. I think the first was, my first career was in finance. I graduated, I'm from Middle America, sort of a small town. My father was a professor, so I didn't really understand finance. And I moved to work on Wall Street at 21 from kind of this, like, I don't know how to explain what it would be. I don't know, like a small town in Switzerland coming to maybe London, like the European equivalent. And I worked on the trading floor at a large investment bank. At the time, I had to wear a skirt and heels. I couldn't wear trousers.
Wow. Really? That was prescribed?
Yeah. Women weren't allowed to wear trousers. And there were very few women. And so I wound up working on Wall Street for 6 years at 3 different firms. Clearly it wasn't the right fit. And then I could never figure out how to fit into that culture. It was, quite frankly, for me, a very toxic culture. I loved the work, but I couldn't figure out how to get ahead in this sort of mainly male environment. So I dropped out, and a lot of women drop out. Now, some women stay and they're incredibly successful, but I couldn't ever make it work at all. So that was, I think, my first, it didn't fit me. And I don't think I thought about it from a systemic point of view. And again, maybe it was just me. But then later, I think after having then a career as a big company operator, I worked in big media companies, and then I worked for media tech startups in Europe. I started angel investing, and that's when I looked around and was like, oh, I can't believe it. Like, this is like the 8th thing I've done in my career, and there's still no women. Like, somebody should do something about it.
And it's interesting, right? Because one way to create change is kind of within the system. So those women who stay in those very toxic environments and try to transform them. And the other way is to create a new system and a new way of doing things.
I think, and I think both are equally valid. I think it's just what kind of person you are. So years ago, I worked with for the FT.com in the US, and I became friends with the career writer. Mm-hmm. And she had a line, which I love, which is, all jobs have shit. It's just what shit you can handle. And so I am the kind of person who can be at a startup that's got 3 more months of runway. The software doesn't work and we don't have any customers. Like, I can handle that stress. But if I'm at a big corporate and so stabbing me in the back and trying to take credit for a deal that I've brought in, I fold. So all deals have shit. It's just what kind of uncomfortableness, suits your personality.
It's a really powerful way of thinking about it. And I think that's probably a good takeaway for our listeners as well.
Yes.
Yeah, to kind of choose your battles and go where it's easiest.
Yeah, and where you fit. I wish I had realized that entrepreneurship was the right path for me at the beginning of my career. As I said, I worked on Wall Street, I worked in big corporates, and it was only once I started to work for these crazy startups, for these crazy founders, that I was like, oh, I'm home. Like, I'm super happy here.
Yeah, great.
Even though there were absolutely no systems, no money, no product half the time.
On this podcast, we're also always interested in getting to know the person behind the success. So I wonder if you could share anything about yourself, what motivates you, perhaps something that is not as visible to the public.
Well, I guess when I'm not working, and I work most of the time, because, HERmesa is my baby, but I have other babies. I have 2 children, although as I joke, HERmesa is the neediest child. I have a very, very wonderful, supportive partner, and I'm very close with my family. So I think my father and my brother, we're all very close. So I think when I'm not working, I'm with family. That's especially as I get older, you don't get that time back. So time feels endless when the children are little, but now as they're getting older. So I'm really very focused on making sure that I put family first. Or at least equal to my child, HERmesa.
Yeah, that's great. So would you also say, because obviously you're working in a very fast-paced environment, also work incredibly hard, and there's a lot of stress, even if positive stress. Would you also say that that's kind of what gives you the balance, spending time with your family, or do you have any other daily habits to recharge?
Yeah, I don't think the family de-stresses me. I have a teenage son. It's not very de-stressful. No, I think I try very much every morning to do 30 minutes of exercise. It's like all I can manage, but I try to do it first thing in the morning. And it depends how angry I am. I either do something quite like to get the energy out. I'll do like weightlifting or go for a super fast walk, or I do yoga. And then my poor partners, I'll wind up on a call and I'll be like, well, you know what my yoga teacher says? We need to lead with grace, or whatever. But sometimes I need to be calmed down. Sometimes I need to just get out the energy. But I think, trying to be a person who exercises for my mental health.
Great. I love that. I wonder if you could share a moment when something on your journey didn't go as planned and how you dealt with that situation and pivoted.
One of the challenges of what I'm trying to do is I'm trying to drive systemic change in a system that hasn't changed. So in the UK, to be an angel investor, you either need to be a sophisticated investor, or you need to understand what you're doing. There's very specific qualifications, or you need to have an annual income over £100,000 a year. Women only represent, it's either 27 or 29% of the people who earn over $100,000 a year. So when I set up an angel syndicate that was predominantly women writing checks, I had a smaller pool of women to draw from, and the women who I did have to draw from had smaller relative wealth to their male peers. So when HERmesa started, we started with this low check size. Everybody's like, that's great. It is great. But like, how many 2,000-pound checks do I have to stack to get into a deal? How much do I have to, get meaningful assets under management? So that was a real challenge. And we've looked at that a lot over the years, and we've thought, should we change that number? Should it be like a 5,000 minimum? How should we do it? But it's super important, we think, to make angel investing accessible. So we're very committed to that low number, but we've had to do other things. So as I always say, it's not rocket scientists, it's P times Q is revenue. So we need to, if we keep the P the same, we need to up the Q. So we are very lucky. Most of our members have come through our community because, and they tell people like them, which is how we've managed to build this sort of very consistent investor persona. But we're always looking for more people to sit at that table, to share their networks, their expertise, but also to put their £2,000 or 5 or 10, whatever kind of money they want, checks in. And then secondly, we've now been able to sign co-investment deals with public bodies who will match fund our checks. And that is making a huge difference because now all of a sudden my checks are like 30 to 50% greater. And again, I keep using the word table, obviously play on Mesa, but that's it. Like if I want to get into a deal and the founder wants to spend time with me versus somebody else on diligence, if she wants to take a check from HERmesa, listen, we bat above our strength because of the quality of our community, but it's really nice to have money. I mean, that's the problem I'm trying to solve. So that's been a real struggle is making this model work, but the I don't know, the pivot or the growth into additional sources of capital. And that's something we need to continue to build on to really make it work at scale.
Yeah, that's very, very interesting. Very creative.
Well, we keep trying to be creative. We keep trying to. I think that if we just copy the existing model, we won't solve the problem.
Right. It takes a lot of innovation.
Yes. And actually, for me, in all seriousness, that's super fun. Like, again, as I told you, I really found that sort of 0 to 1 is my happy place as an entrepreneur. And HERmesa is our business. It's sort of my team. It's like our baby, our business. So we like to innovate as well as invest.
Can you share with us a bit more about the types of businesses that you have funded and that you are particularly excited about?
Yes. So I joke that like my children, I love them all equally, all of my companies equally. But of the 35 companies, what people are often surprised about when they meet women investors, they're like, so you do femtech? And I always say, no, first of all, we can invest outside of the bikini area as women and we can build outside of the bikini area. So we only have 2 bikini area businesses in our portfolio who fall into the femtech. We have a couple more generally in health, healthy aging, biotech, but the bulk of our investments are in 2 broad categories, which we call climate and sustainability and future of work. Climate and sustainability breaks down into hard science, biomaterials, creating compostable plastic-like that can just turn into, dissolve in your rubbish bin. Ag tech using microbes to create biopesticides and biofertilizers, chemical engineering to strip the color from post-consumer textile waste, to recycle the dye and to recycle the fibers. These are real hard tech solutions to the climate situation. We also have companies like Byway, Byway.travel, got to shout that one out, in our portfolio, which was a travel tech business that we invested in the pre-seed round during COVID. We did a travel business in COVID. They'd done 20 trips at the time, and now they've sent something like 15,000 people away on package holidays, all using public transportation to reduce your carbon footprint.
Wow.
And we've invested through the Series A on that company. And that's sort of a lifestyle. So we've also invested in Vinterior, the UK's largest vintage furniture business, by rotation, peer-to-peer rental. So these are behavioral changes that consumers can make to address the climate crisis. So we look at it both from a very hard tech angle and a very behavior-driven angle. And then in future of work, that really means how we're going to work in the future. So it does have a little bit of HR tech in there, but it also, we lump everything that's sort of AI-driven in there. And again, we think about, I'm sure we could talk about AI forever, but we think of AI as like a feature. It's not the whole thing. Like, how do you use AI to better engineer the software to solve the problem? So one of the companies we invested in very early is a company called Vala out of Scotland, actually an American founder, but based in Edinburgh. And they have automated the process of filing an employment discrimination claim. And that allows people, 90% of the people who are sexually harassed at work don't have any access to justice. But you now, because they just simply don't have the money to file. So Vala was very, very early into figuring out how AI could be leveraged to solve this problem. And what you'll get from these stories is we invest in a huge range of things, which is why that expert model is so helpful to pick the winners. But what I also think is there are so many people doing so many exciting things that can solve really, really, really big problems. I was talking about this yesterday. I mentor in the UK Space Agency. Those guys are solving crazy problems. And I talked about my investment thesis. I like to solve big problems. I like to put my money behind things that are going to change how we live and work in the future. And that's, I would say, most of the community follows. So it's health, future of work, and climate and sustainability.
And it just shows the incredible spectrum of solutions that women are advancing. It's really impressive.
Again, women can be engineers, as I always say. We can do just about anything. But I think what is important is to be able to listen to women as people and not just as women. Sometimes I do think we sort of over-index on female founders. And we've just invested in a construction tech business, and the woman is like, oh God, please stop calling me a female founder. I've made it in construction. Like, that is the most male-dominated industry. Why do you have to keep calling me a woman?
Right.
And I can see that too.
I can see that, yeah.
So,
Very
but again,
interesting.
what do I believe all these companies have in common? I think they're all doing really building meaningful businesses that are going to generate a return. We really, really look at the very beginning, who's going to buy this company? What does the exit look like? And we intend to take sort of a more hands-on role guiding these companies to the extent that we can towards an exit, because that's what it's, again, all about. It's about making sure that everybody gets rich from this process while we drive change.
Yeah. And what strikes me about the examples you shared is that they're really scalable. So they are solving huge environmental, social challenges. So they are generating a really positive impact. But more importantly, they're really scalable. Like, they're really big ideas.
Yeah, absolutely. Absolutely. This is something I think that my partners and I in particular have a real preference for, are the big hitters. We've had but we've recently been challenged by a founder. So a third of our investors are also founders. And so we've been challenged by one of them to say, look, maybe you could look at slightly smaller businesses, but that the return is still the same, if you invest at a low enough price. And I think that's a fair challenge too. We should be able to support women at all stages of the journey.
Yeah.
And building, maybe smaller solutions versus bigger solutions, as long as the payoff is there. And it makes sense, we should be looking at that. So I take that challenge. If you're listening, the person knows who they are.
Can you share a bit more about the kind of advice you provide? So once you've invested, how do you accompany those companies also all the way to an exit, which I think is so important to think about the exit early on?
So we love data at HERmesa, and we track everything. So I can't remember the exact number. It's got to be over 600 maybe points of support, times that we've provided support. To take a phrase from American hockey or Canadian as well, ice hockey, you have to have a lot of shots on goal. I think that probably football has that same expression. A lot of shots on goal. So we take a lot of shots on goal. They don't always hit. But those shots on goal are, let me see if I know somebody at L'Oreal. We have somebody from L'Oreal. Can you introduce us to the chief sustainability officer? So we do a lot of that, like really low effort for my investors, but high value for the founders, helping them to navigate B2B sales. I come from a B2B sales background. It's super hard. You can spend 6 months trying to find the right person. So we do a lot of introductions to customers. We do a lot of work behind the scenes trying to speak to our friends, meaning other angel groups, VCs, different, around Europe and the UK, to try to get our companies funded. So we do a huge amount of fundraising work. So those are sort of the two big areas. And then we obviously have like hiring, who do you know? But what we also do, and we're always struggling how we talk about this, is we like to play the role of trusted advisor. So we believe in our founders. If we invest in them, like, my money is already gone. I've put all my money on you. So I want to make you a success. And if you are struggling with your co-founder, if you are struggling with an aggressive investor, I'm going to back you because you're the one who's going to build this business. So we do a huge amount of very quiet, behind the scenes, shoulder to lead on, trusted advisor, coach for our founders when they have a difficult moment. Now, do I do that with all founders? Absolutely not. Some founders, they don't need us. We hear from them twice a year. when we chase them. Other founders we talk to, once a month. It really just depends. The earlier we invest, pre-seed, first raise, the more helpful we tend to be. But again, what I keep finding over and over is that it's those really high impact, low time. We had a company that has a biomaterial startup, and they were selling packaging in the beauty industry. And we had somebody who had worked at a packaging consultancy for the beauty industry. So that 1 hour conversation where the investor downloaded, okay, this is how the industry works, it just is hugely valuable. Yeah. We had another company that was hiring a head of talent. And one of my investors is like, oh, I hire heads of HR all the time. Shall I show you how to interview and what the questions are and the red flags? So then we hear back from the founders, my God, that was like life-changing. So we try to do that kind of stuff. Again, high impact, low time. I know I keep saying that, but oh my God, the last thing a founder needs is somebody to talk at her and to mansplain or womansplain. Just give them what they want and let them go build the business.
And it just speaks again to the power of your network. And to have all those experts on all these different topics, super valuable.
Well, so somebody asked me recently, what's next for HERmesa? And I'm like, oh, we're rebuilding our CRM. But in order to really make our business scalable, because I've talked about needing to really increase the number of investors to make that happen, we're rebuilding our whole back end. And obviously, we're putting a lot of AI into how we communicate and, sort of build little work agents. But more, we're tracking everybody's skills. We already have a database, but we're really trying to up it a whole level so that exactly when that random request, you need somebody for beauty packaging, we don't have to rely on this CRM. We actually have all of that in there.
That's great. Yeah.
And again, if we don't have the right expert, we clearly won't offer help, but we also won't invest. That's really our model. Because we want to be insightful and helpful all the way through.
You mentioned AI, and I would love to hear a bit more about where you see the opportunities, because I've had a few guests on this podcast who talked about, the challenges like gender bias in AI. I know there's also a lot of discussion, not necessarily from a gender perspective, but in general about the big opportunities and the big risks. And I would love to hear from you.
I am not an expert at all. And actually, whenever I meet anybody who's a little bit ahead of me in investing, I ask them this question. So I think, so this morning, actually, on my way here, I saw a joke, sort of TikTok from a VC who's like, I keep telling my founders that the only moat is speed. But then I wonder, is that true against a company that like OpenAI that can innovate and do anything and has more money than God? So I think it was a joke, but it's actually really true. Like, what does software look like in the future when the data that you need to train on is the value? So will companies buy third-party software to train on their data? Or with English being, vibe coding being the most positive, popular programming language now, will they just try to create their own agents? And I have asked more experienced software investors their view, and their comment is people will try and then they will fail. And my comment is like, great. Like, so 2 years from now, like I can see that, this is pretty specialized stuff. It's not, you can't just go to Lovable and create things that, you out of the box, maybe the way good software is built or insightful AI is built. But during those 2 or 3 years, while the companies try to get their data in order, while they try to build themselves, what happens to enterprise SaaS businesses? I mean, that's a question. So because of that, we are very, very cautious, and not just ourselves. Everybody in the industry is like, oh, man, I don't know what to do. So we're all watching and doing very selective bets. And where we have done software investments, it's very, very deep, particular verticals that have a moat that's other than speed. So our construction tech investment, which is called Simterra, they come from the construction industry, and they've built a solution for the people who are actually building. And the moat is really the UX. Like, they've worked so hard on user-centered design so that people will work on the construction site and put the data in. They understand how somebody works. Like, even the buttons are fat to work for contractors. So it's that kind of company that is layering AI into its solution, but has a really, really sort of vertical, highly specialized moat is where I see opportunities to continue to add AI in and to be defensible. But do I know what I'm talking about? I don't think so. Do I think anyone knows what they're talking about? No. I think that this industry is moving so fast, and every time there's a new release, every time OpenAI says something, the whole industry shakes. I think that's why you're seeing a shift towards deep tech. We've been investing in deep tech as part of our portfolio. About a quarter of our investments are in deep tech. I will say our best performers are also deep tech. So we are doubling down a little bit on deep tech. But again, the industry is as well. Everybody's like, wait, let's build something that AI can't do, i.e. the robot. So, but I think it's an absolutely exciting, transformative, frightening time with AI. And yeah, as an investor, we're thinking very, very carefully about where we put our money. But yeah, all the questions about bias, who gets to build, what it looks like, for sure. Huge issues, but I'm not the person to answer those.
I'd love to hear if you're willing to share a time where you were facing a big risk and how you encountered that.
I think, honestly, the biggest risk was setting up HERmesa. I created an investor network. I wasn't a professional investor. I set up a community-driven investor network. I had never led a community, which also, it makes me sound a little bit like an asshole. Like, what were you thinking? So I think passion is good. I mean, obviously, I had a lot of skills. I had a big finance background, although not in this asset class. I was an operator. I was an entrepreneur. I was mentoring startups. So I sort of had pieces of it, but the core skills, being a community leader of an investor group, I lacked. But what I lacked in hands-on experience, I think I made up for in passion, anger, determination to change the system. And so that was a huge risk. Like, there was no guarantee that I was going to be able to get more than those 4 people who were sitting around the dinner table with me to sort of follow and trust the process of what we were building. Yeah, every day that somebody joins HERmesa, like we had somebody, in fact, I before I came to work, I saw we had another member. I think she's our 301st. Wow. I've got to keep track. But, every time somebody signs that form and joins us, I'm just absolutely tickled that they believe enough in what we're building. Yeah, I guess I should have some confidence in what I'm building, but that was such a risk. Like, there was just absolutely no guarantee it would work. But I just thought, if I don't do this, like, I have a good friend who gave me some amazing advice, which is there's two paths you can take. You can try and fail, or you can be afraid to try. And which one do you want to be? Yeah. So I think that really simple line kind of pushed me to try. And that was the biggest risk. I also have, you put, seed capital in, it's a lot to build something like this.
Yeah, I can really see that. I also wonder, on your journey, was there something like a shift moment when something clicked and then everything started moving forward?
So HERmesa, when it started, it's really funny. I have a member who was one of the first at that group at the table, and she said to me, yeah, once you brought on your partners, it got so much better. And it's true. So I'm like, hey, you guys want to invest? Like, I literally was like, at the first meeting, I'm like, I have a name and a logo. Like, the piece of paper had a logo this big because I had nothing else on it. And so we were really building the bicycle as we rode it. We were trying to figure things out. And I mean, to this day, I have no idea how I managed to attract such really cool, interesting people who are, again, still with me 5 years on. But one of the people who joined very early is my third partner, Vibka. And Vibka's a consumer marketeer. And she started angel investing on her own during her mat leave. She was on maternity leave and was like, oh, this is too boring with the baby, and started to write checks. And then she was introduced to HERmesa and really loved what we were doing. She's a fantastic early stage investor. And she said, would you like some help with marketing? And she looked backwards. There's the saying that behind it's all dots until you connect them with lines. And so her ability to kind of craft a story and to have that realization that we are a really unique group of people, of operators, and to sort of formalize how we use them. That was a real shift moment. And I think at that point, the messaging became clearer, our value proposition became clearer, our investor persona became clearer, so we were able to get the right investors to then feed that flywheel. So that was a really big shift that partner brought in. And then I should also say my other partner, Emma, joined me even before I launched HERmesa. She was my advisor for a long time before she joined the team. And just to have her support, she at the time was CFO of a VC fund. And to have somebody who knew what they were doing and believed in me, that was also a really big shift, you know. So when I took that risk, I knew that somebody who knew something about what I was doing thought I was doing the right thing. So now we've been a team for 4 years, and that's been a huge, getting that team to work and drawing on everybody's skills has been a real step change. And the community sees it.
No, it's such incredible milestones and how they have led to so much growth.
Yeah, I mean, we try to keep what we call a book of compliments, and we try to, you know, not every team meeting, but we try to start with wins because, you know, when you're an entrepreneur, it's always climbing the mountain. You're always like looking up, but sometimes you need to look back and celebrate what you've achieved. So that's my advice actually to anyone who's building, is to keep that book of compliments. If somebody says something nice to you, like literally write it down. I have a coach and she says she has an entire bulletin board. So when she's on a Zoom call, she can see all of the quotes to remind her and to give her confidence.
Yeah,
I don't do that,
great.
but I should. It's a great suggestion. And
it's also great to kind of strengthen that resilience, right? When it is so hard on the entrepreneurial journey.
It's so hard. And if you think about what our goals are versus where we are, like we're just getting going. And, but again, as one of my partners says, like, how do you eat the elephant? It's like one bite at a time. That's all you can do. You know, we're trying different systems. We're trying to do sort of incremental improvements because they do add up.
You briefly talked about this. What's next for HERmesa? You mentioned the CRM. What other big goals?
The CRM actually, it's funny, but what it really does is it automates a lot of the back office, and it allows us to personalize and to make sure we are, I know it sounds weird to personalize at scale with AI, but it really allows us to make sure that we're targeting the right investors at the right time. We're respectful of their time and their interests and how they want to be involved. So that lets us do that very efficiently at scale. So value all around. So we're trying, as always, to drive people to HERmesa at any time. Anyone who's listening to this podcast, even 5 years from now, you can go to hermesa.co.uk and join as a member. Just click that button. We are continually looking to raise institutional capital. But our next immediate step is we're probably going to launch sort of an auto invest feature for our members, halfway between sort of a fund and and self-directed. Because what we hear is that people who've been with us for a few years, they see how we work. They see that we follow a super, super structured, you know, institutional grade process. They know that our deal flow is good and they can't keep up. Now, I don't think I'm showing people enough deals. I'd like to show more. But I've had a lot of people tell me, I can't keep up. Like, I do a newsletter every weekend, which has a really good open rate. And every week it has the deal flow in there. And people are like, I'm behind. I get people 3 months later, can I invest in that company? No, we close it. So they just can't keep up. But we know the interest is there. We know that we've earned their trust. We know that we're building something and you know, our process is really good. So we're going to create probably Q1 next year, a process so people who are part of our community can better access our deal flow. You know, less time for them. The same thing, high impact, low time for them. The same way for our founders.
Great.
People are busy. You know, this is my full-time job, but most people who angel invest, this is like maybe their third job. They have a super demanding job. They have a super demanding home life. I had a amazing investor send me a note and say, I'm so sorry I haven't screened your deals, but I've got 2 kids under 2. I'm building a new house. I've moved into a bigger role at work. I was like, oh my God, I'm so stressed just reading that. Don't apologize. So we really all about that sort of CRM, new ways of investing. Everything is about making sure that we can capture really high value women at a minimum amount of their time, get their awesome expertise and capital with lowest touch, you know, highest value into our founders and vice versa.
Yeah, great. Wow, I love it.
Yeah, so that's the goal. But yeah, we want to be behind not one, but a number of successful female exits in the next, 5 to 10 years. That's our vision. We want to change the narrative. And the only way that narrative gets changed is by actually showing success, by actually having male investors say, oh, man, yeah, oh, you guys invested that early? Oh, wow, okay.
Yeah, great.
So that's our goal.
What about for founders? I know that for founders, often the barriers are quite high because you're looking for that warm introduction to that angel investor.
Yeah.
And you have also a very welcoming and open way for founders to get in touch with you. Can you talk a bit about that?
Well, I can talk about what we do and what happens in practice. So in reality, anybody can kind of reach anybody with a cold intro, like the internet. You can find out, or every VC fund, every angel syndicate has a form that says submit your pitch here. In practice, we've analyzed our portfolio versus our deal flow. 50% of our deal flow is cold inbound, and and our portfolio is 3% cold inbound. So that shows you there's two things that happen. One, there's not like quantity over quality doesn't matter. And number two, if I'm drowning in deal flow, again, we're starting to build agents to screen and work, with AI will be faster. But like, which one am I going to pull from the pile? I'm going to pull from the pile the one that one of my investors has said, I'm mentoring this company and I think they're great. Look, they still have to go through the proper screening and, meet all the requirements, but we'll pull them to the top of the pile. So I was, as I said, at this accelerator day yesterday, and somebody else gave a presentation and he said, cold intros are almost dead. Warm intros are the only way to go. And I know that you don't know anybody. I don't know people on the other side, like when I'm raising capital, but that's a real mark of an entrepreneur. If you can't figure out how to get to me through LinkedIn or to one of my 300 members on LinkedIn, if you can't reach out to one of my portfolio companies in your field and ask for an introduction, then how do you, it's sort of a sign of hustle. I know I sounded like a total jerk VC at this point, but that's kind of the way, that's what actually happens. So some people are very different. I know funds that are really, really, really much better than I am, and they look at everything. And I know people who will look at nothing that's cold. So we're somewhere in the middle. But that's my advice is you hustle your way in. There's different software packages out there. There's something OpenVC and ShipShape VC here in the UK that can help you find the right investors. So it's about, once you find somebody, that's what sales is, right? And you're going to have to sell your product.
Yeah. Thank you for being so honest about this, because I think it's also, in a way, it's almost like a disservice to founders to suggest that the cold route is the same.
I mean, it can work, but if I've told you that 50% of my deal flow is cold, but only 3% of my portfolio, I would argue other people's portfolios probably look like that. And again, sometimes I'll get that inbound will include like a female founder, pharmacy tech in Zanzibar, so out of scope, right? I don't invest in Africa, but the more target, so even for quality deal flow, you want someone to push you.
Yeah. And I like how you framed it, right? That it's not necessarily a question of privilege, but it's a question of creativity and going the extra mile to finding a way to get that introduction. And it's not so difficult when you have such a massive network.
But again, I really would like founders to think about how they're going to sell. So I know we're moving a little bit into investing now, but my lens, because I was head of commercial for 3 different startups, is, will anybody buy this? Like, you might be solving a really big problem, particularly I was working, as I said, with these very technical founders yesterday. You might have really good patents, but the best tech doesn't always win. I mean, look, Microsoft, right? That was like their whole story. It was never the best tech. It was the fastest follower and the best execution. So show me that you can execute. And so I think that for me, and again, I know that I personally over-index on commercial skills, but I think that that's a huge part of what makes somebody successful is their ability to get in front of the right people to sell their solution. Either you're getting in front of consumers in a really clever way, or you're getting in front of B2B enterprise buyers or government or whatever. You have to be able to do that, to hack through that as a founder. So you just should treat raising money as a sales process that you need to hack through.
Yeah, I like that. Any other advice that you would share with founders who are fundraising?
I think it's a hideous, hideous process. I think a couple of pieces of advice. Number one, don't raise if you don't have to. Your equity is the single most important thing you have. Don't give it away too easily to advisors. Have a founder agreement in place that protects everybody's equity. So I think, you should always know that this is the most expensive way to raise money. But if you do want to raise money, you need to be super thoughtful about who you target. So don't target people who don't invest in Zanzibar. I think you should also be very aware that when you take money, you're taking money from people who are going to be a part of your life for the next 7 years. And the more money you take, the more you lose control and the more those people can fire you. And I think that nothing ever goes as planned as an entrepreneur. So you want to make sure that you have people. Again, we're a small line on people's cap table. We invest, relatively smaller amounts. But again, we try to play that trusted advisor. Like when it's all going wrong, like let's have a conversation. Like a real conversation, how we can solve the problem. And you need people who will have that conversation with you. How do you find out? Because everybody lies, right? Like, I want to get into your deal. I tell you how great I am, how much value I add. The founders should diligence their investors. Everyone from an angel, who else have you invested in? You go onto LinkedIn, who knows this person? It's like your dad's friend at the golf club. Well, like you need to go around the houses. You need to make sure that these people are good people, the kind of people who you want. I think money is important, and I know people get desperate. I know that, but short-term cash flow, it could ruin your business. So that's what I think. Just really the quality of the investor is hugely important.
Yeah.
They don't all have to add super value, but they should definitely not subtract value.
Right. Yeah. No, that's a really great one because people do get so desperate when they're fundraising at some point.
Yeah. I guess the last thing is that you should go out to raise when you don't need to raise, or you tell people and you meet people and you have coffees and you tell them I'm not raising. I joke that fundraising is like early stage dating. Early stage fundraising is like dating, like when you're desperate to get a date to the prom. But once you have a date to the prom, then the second, the second person asks you. It's ridiculous. But I do think that there's a little bit of that. Nobody likes desperation.
And also building those relationships early on, right? Not starting to think about relationships when you are already desperate, but building them early
100%. And it's not easy because you're like, oh, and I do get this. Like my partners will tell me, oh, Marla, like, are you doing enough networking? And I'm like, oh my God, I'm trying to push all these deals through. So I super understand this is a problem, but you need to do a little bit, call it business development or investor development, and, carve out some time. If you don't put it on your to-do list and you don't measure it, it won't happen because it's zero fun. But it needs to be done. It's really funny. We're super open to cold inbound for investors. For founders, we like a warm intro. But no, in all seriousness, it's just, please reach out. You can reach out to me on LinkedIn. I'm not great on LinkedIn, but I will eventually get back to you. But just to get in touch, I want people, as I said, to start. Like, there's never a perfect time to start angel investing. There's never a perfect moment. You're going to be busy always, but if there is sort of you're on a 3-month gap between jobs, you're on maternity leave. We get a lot of people who are on maternity leave. If you're bored at work and you want to learn something new, just come along. Our model is we don't charge people for membership. We only charge a administrative fee at the time of investment and profit share on exit carry. But so we're very, very aligned. We want to make that table as big as possible. So I would just always encourage people to come. And we're super happy to collaborate with other investors on deal flow. Accelerated, whoever. Just we're fighting the good fight, but it's a really tough challenge, and we want to do it with as many friends and allies as possible.
Fantastic. So if you are a woman who's interested in investing,
or
you invest
men can absolutely.
Well?
We are women-led, but not women only. We joke that the only requirement for male investors, he has to let a woman ask the first question.
Nice. I love it. That's great.
We just want to make sure we leave space for women's voices to start. But no, we have absolutely brilliant male allies, and they are really motivated exactly by the same things that motivate women investors. They want to make money, they see great deal flow, and they want to change the story about who has capital and who has power. So anybody who is aligned with that and wants to start learning to angel invest, or already is an investor and wants to be a part of our community and share in our deal flow, absolutely, that would be fantastic to reach out to HERmesa.
And that's going through your website, or what is the best
right
way?
now the HERmesa website is hermesa.co.uk. We also own hermesa.vc. One day we'll migrate. That's also on the tech roadmap, probably next year. So if you're listening to this next year, check both.
That's great. And so for any founders, try to get that warm intro.
Try to get that warm intro. But I'm telling you, like, we look at everything, but we'll look at it a lot faster if you come through. And again, I can tell you all the people who cold call me and try to sell me office space and hiring services and advertising, they've all done that off of LinkedIn, because we have, anyone who says they're at HERmesa, they put it on their bio, or their LinkedIn bio. Yeah. So you can do it. LinkedIn is your friend, sales navigator.
And then anyone else who's just curious, follow Marla on LinkedIn.
Absolutely, yes. Oh my God, I would be remiss if I didn't ask you to follow the HERmesa channel on LinkedIn. You can follow me. I talk about whatever I want to talk about in my own voice, but the channel is actually really good. The HERmesa channel, we highlight investors in our community, which I love. So it's really much more about other people's stories. So just this week, we highlighted an investor, and she said, I wanted to angel invest, but I was too shy to even reach out to to groups because I thought I wasn't good enough, or I didn't have enough money, or I didn't know enough. This woman builds AI models. Okay, that's like what her day job is. And then she said in her profile, I just realized after a couple of years that nobody knows the answer. The fun is getting in the game. But so on LinkedIn, you'll really get to meet our community. You'll get to meet our investors. You'll get to meet our founders. And we always write about every investment we do, why we've invested. We should highlight the expert. So it's a nice way to just kind of sit and watch a little bit of light content, but to get you into that sense of, oh, I could be an angel. Oh, and this is the kind of deals I could do. And oh, this is what's interesting. So yeah, please do.
That's great. I love it, because that's also inspiring people, giving them the courage to get started, and they can observe before they become active. It's really great.
As I always say, there's no cost to join. Join HERmesa, watch the buses go by, and then you'll see if you want to get on one.
Marla, thank you so much. I really appreciate you.
Thank you. No, it's always, listen, as I said, I don't have favorites, but HERmesa clearly is my favorite child. So it's a real pleasure to get to share the story with you. And I hope the people who are listening enjoyed it and, took some inspiration and action from it.
Yeah, action. Thank you very much, Marla.
Thank you.
A quick note of thanks and a small invitation. If you're enjoying this podcast, subscribing is one of the easiest ways to support the work and help these conversations travel further. I really appreciate you being here.